Welcome back to the channel. If you've ever rented out a room on Airbnb, listed your holiday home for a few weekends, or run a full-time short-term rental business, you've probably wondered how the tax works. In Australia, the ATO has been keeping a very close eye on Airbnb and other short-term rentals. And in 2025, the rules are tighter than ever. With new data sharing agreements between the ATO and rental platforms, there's almost no way to hide income. And mistakes can lead to serious tax bills, penalties, and even debts. So in this video, we'll cover Airbnb and short-term rental tax rules in 2025. We'll go through what income you need to declare, which expenses you can claim as deductions, GST rules for Airbnb hosts, capital gains tax when you sell a property, ATO's data matching program and what they see, common mistakes that get people into trouble, and a step-by-step checklist to help you stay compliant and avoid tax shocks. Whether you're a casual host or running a side business, this video will give you the clarity you need. First things first, any money you earn from Airbnb or other short-term rental platforms is taxable income in Australia. It doesn't matter if it's a spare bedroom in your own home, a granny flat in the backyard, a holiday property you list during peak season, or a full-time investment property. If you're earning rent, it's taxable, and it's not just the nightly rate. You must also declare cleaning fees, service fees, and any other amounts guests pay you. Some people think, it's just pocket money, I don't need to declare it. But the ATO gets all the data directly from Airbnb and other platforms, so if you don't declare it, they will know. The good news is, if you're paying tax on income, you can claim deductions on expenses that relate to earning that income. Some common ones are advertising costs, things like photography, listing fees or boosted ads, cleaning and maintenance, cleaning services, laundry, gardening, pool care, utilities, electricity, gas, water, internet if these are included in the guest stay, insurance, landlord or short-term rental insurance, management fees if you use an agent or property manager, depreciation, furniture, appliances, carpets and fittings, repairs, fixing broken items, repainting, replacing damaged goods. But deductions aren't always straightforward. If you're renting out part of your home, you can't usually claim 100% of the expenses, only the portion that relates to guest use. For example, if you rent out one bedroom in a 3-bedroom house and guests share the living room and kitchen, you'll need to apportion expenses based on floor area and time rented. And remember, capital expenses like buying furniture are usually claimed over time through depreciation, not immediate deduction in the year you pay them. Now, let's clear up a common question. Do Airbnb hosts need to register for GST? For most people, the answer is no. Residential rent, including Airbnb and short-term stays in residential property, is input tax. That means you don't charge GST and you can't claim GST credits on your expenses. However, if you're providing something more like hotel-style accommodation, for example, a serviced apartment with daily housekeeping, you may fall into commercial residential premises rules, and GST could apply. But for the majority of casual hosts, no GST registration is required, even if your turnover is above the $75,000 threshold. If you rent out part of your main residence on Airbnb, you may lose part of your main residence exemption for capital gains tax when you eventually sell the property. For example, say you own your home and rent out one room for a few years. That portion of the property may not be exempt from capital gains tax, and you could face a taxable gain on that part when you sell. The calculation depends on the floor area rented, or the period it was rented, and how the property was used. The same applies if you rent out a holiday house that you sometimes use personally. You'll need to apportion between private use and income-producing use. So earnings from Airbnb might look small in the short term, but it can have long-term tax consequences when you sell your property. Now, let's talk about enforcement. In 2025, the ATO is running one of its biggest data matching programs ever. All major short-term rental platforms, including Airbnb, Stays, and Booking.com, are required to report detailed information about hosts directly to the ATO. That includes names and addresses of hosts, property addresses, income earned, length of stays, fees charged. The ATO then cross-checks this against your tax return. If there's a mismatch, they will send you a please explain notice, or in some cases, adjust your return automatically. There are a few other things to keep in mind. 1. HECS and HELP repayments. Airbnb income counts as taxable income, which may push you over repayment thresholds. 2. Medicare levy surcharge. Higher income from rentals could push you into paying this if you don't have private hospital cover. 3. Council and state taxes. Some local councils and states introduced short-term rental levies or require registration. Always check your local rules to avoid surprises. Let's go through the most common mistakes that get Airbnb hosts into tax trouble. Not declaring all income. Underreporting is a big red flag. Claiming 100% of expenses when only part is deductible, like trying to deduct all utilities for the whole house when only one room is rented. Forgetting capital gains tax. Ignoring the long-term impact when you sell. Treating Airbnb as a hobby. The ATO doesn't care if it's casual, it's still taxable. Poor record keeping, not tracking expenses, depreciation, or guest stays properly. We'll use an example to bring this to life. Michael owns a 3-bedroom home in Sydney. He lives in 2 bedrooms and rents out the third on Airbnb for 6 months of the year. In financial year 2025 to 26, he earns $12,000 from Airbnb. He also pays $3,000 in cleaning, laundry, and extra utilities for guest use. He can claim a portion of other household expenses like mortgage interest, council rates, and insurance based on the proportion of the house rented and the period it's rented. Let's say that works out to $2,000. So he declares $12,000 income and claims $5,000 in deductions. That leaves $7,000 taxable profit added to his income for the year. But because he rented out part of his home, he may also lose part of his capital gains tax exemption when he sells. The portion will be worked out based on floor area and time rented. If you're hosting on Airbnb or any short-term rental platform in 2025, make sure you do the following. 1. Track all your income. Don't rely just on Airbnb statements. Keep your own records too. 2. Keep receipts for expenses. 3. Work out apportionment and only claim deductions that relate to guest use. 4. Know the CGT impact. 5. Check GST rules. Usually no GST, but double check if you're offering hotel-style business services. 6. Declare everything. 7. Review annually. Laws and ATO enforcement priorities change each year. That's it for today's video. If you found this breakdown helpful, hit the like button. Subscribe for more Australian tax and money tips. Thanks for watching, and I'll see you in the next video.